Okay, let's explore this personal tax situation where we need to determine the amount of student loan that a student can deduct in the year after he graduates from a university and he's married. Okay, so the situation appears in front of you. Derek attended Southern Hawaii Institute of Technology, an accredited university during 2013 to 2017. He lived at home and was claimed by his parents as a deduction during the entire duration of his education. All right, now if we look at the second paragraph, it says that Derek incurred education expenses of $12,000 during college, of which $2,640 was paid for by scholarships. To finance his education, he borrowed $8,000 through a federal student loan program, and he borrowed another $4,000 from a local lending institution for educational purposes. Okay, then after graduation from Southern Hawaii Institute of Technology, he married and moved with his spouse to a new city. Now, in 2018, this is the year after graduation, he incurred $800 of interest on the federal loans and $400 on the lending institution loan. He filed a joint return with his spouse showing modified adjusted gross income, or AGI, of $109,000. So the question is, what amount of student loan interest can Derek and his spouse deduct in 2018, if any? Okay, now I've rearranged the screen a little bit so we can explore the answer. All right, let's focus on the first paragraph here. Generally, Derek is permitted to take a 4 AGI deduction for student loan interest that he pays. He's the person obligated to pay the loan. Amounts were actually paid, and he's not a dependent of someone else for 2018. Okay, now, there is a limitation that applies, though. Qualified education expenses must be reduced by the amount of qualified scholarships. Since 2,640 of the total 12,000 of education expenses was covered by a scholarship, that means that only 78% of his borrowings went for qualified expenses, so therefore only 78% of the interest paid will qualify. Okay, you see the calculation below. You take 78% times 1,200, and that's how we come up with the $936. And remember, the 1,200 was the actual interest that he incurred. 800 on the federal loans and 400 on the lending institution. Okay, now, the last part of this says that Derek's allowed deduction is $936 as his modified adjusted gross income, or MAGI, of $109,000 is below the $135,000 modified adjusted gross income threshold for the reduction of student loan interest deductibility for those married filing jointly, or MFJ. Okay, so I hope you found this helpful.